10, 9, ignition sequence start, 6.
Hello and welcome to Rocket Fuel, your daily update of everything that's happening in the Rocket Pool community. My name is Wack. Today is October 12th and we're going to start today's episode with this information of a new Smartnode stack that's out. So Joe says we have a big announcement today. We've just released the next major Smartnode update, version 1.11.0. It's recommended update for all node operators due to client upgrades and new features. So as always, I talked about this yesterday and we talked about the patch notes. So mostly it's a repeat of that, but there's new test network now. Is the key information in here that you need to get out of it is that a new testnet will be Liquidity. So that is what is being used in the Smartnode stack, and Praetor is being deprecated. So that means that there'll be no more support going forward for the Gurley or Praetor test networks. And what Joe says is with this release, the Praetor test network is deprecated, and Liquidity will replace it as Rocket Pool's long-term test network. This is expected to be the last version of the Smartnode stack that will have full support for Praetor. If you run a node on Praetor, please exit your testnet mini pools to gracefully remove them from the Validator test set. Follow our guide and there's a link to learn how to do this. So then there's key changes, which is the same thing from yesterday, which basically says all clients have had an update, and there's updates to Geth and blah blah blah, block native MEV boost relay updates, like the whole lot. So this is quite a big update. It's recommended for everyone to upgrade to this version, so do that today. I think it's good for everyone to do that. So do that as soon as possible. And we'll talk about why you should do it today in a few minutes. Okay, just to reiterate the points that Joe was making here, Langer said as well that, that the new version has Liquidity support, and he says we are sunsetting Gurley Praetor over the next week, and so Liquidity will become our new testnet. Bear with us during this transition as we go through an update. If you have any questions, let us know. Many thanks, Rocket Pool. So yeah, if you're running a testnet on Praetor or on Praetor, Gurley, then you can keep doing that going forwards. However, you won't get any support from the Smartnode stack for that. So it might be the case that it stops working soon, and of course Gurley itself is going to be turned off in a couple of months time, I think on the end of December, so keep that in mind as well. But yeah, Liquidity is where all the cool kids are hanging out now, so get yourself over there. And I think the contracts, I'm not sure if the Rocket Pool contracts have been deployed yet or not. There was some talk of that a couple of days ago, that the latest contracts will be deployed there, and you'll be able to use mini pools validators in the same way that you would on mainnet, but I'm not sure if we're there yet. So Langer says over the next week they're gonna be getting everything through the transition, so it might be that we look out for news about that, and of course I will let you know as soon as I hear anything. And then there was some discussion in Trader about this. So Joe says so long Praetor, and he's on the finality, the consensus is going down now. It's down to 76 or 79%. So more and more people are just exiting their validators. So they'll be getting inactivity leaked, I guess. And this close to not reaching finality. So that's why they said, gracefully exit your validators if you have them. Patcher says, I exited 50 Praetor validators today. I guess I should just abandon the Obel node. I could use that box. And Joe says, I put the patch notes in version 11 that this will be the last one with Praetor support, so everyone should please just exit. And Patcher says to go to Liquidity, and Joe says, as a network is basically dead now. That he means Praetor. He says there's zero chance of chewing through this, and there's 80,470 staking pool balance. So Patcher says that sounds like a job for object, and Joe says that it's all his, and these were once a thing. And then there's information about ETH being deposited into the deposit pool. He says out to be younger again, but that's besides the point. So go to discussions. Go to Praetor and exit your validators and get them running on Liquidity soon. That's where all the stuff's happening now. And then, of course, just as we have a new Smartnode stack come out, you always get client updates like right away. And then Geth version 1.13.3 is out as well, and it's fixing a rare bug in Pebble that caused runaway disk and CPU usage. Apart from that, a bunch of smaller features are also in, pushing towards Cancun hard fork. So this is really exciting, of course, but I'm sure Joe's going to be pulling his head out when he wakes up today, because this is always the case that clients make upgrades after some new Smartnode comes out. But of course, there's ways that you can manually update your execution of consensus clients, and that's all in the TUI, which is Rocket Pool system config. So go there and you can change the tags manually to upgrade to version 1.13.3 if that's what you want to do. Okay, and then next, more about the upgrade. Of course, as you know, that if you update your node, to the latest clients, to the latest Smartnode stack, you will be eligible for a POAP. So here's Shifrin saying, the drill, update within 24 hours to receive a POAP. Post a screenshot of your Smartnode version to be eligible. And this will close in just over 24 hours from now. And people are starting to share photos and screenshots of their upgrades, so do that as soon as possible to get the POAP. Okay, next we're going to be talking about liquidity for Rocket Pool, so for the RPL token. So as you can see on the screen here, there's a liquidity chart. So the red section is people who are trying to sell RPL, and on the right section is people who are trying to buy RPL, and these are like liquidity walls that we have. As you all know, the price of the RPL token has come down a lot recently. It's currently at around $18, and we have very little demand on the buy side for RPL, which means just like in like 6 months ago when the price was going really high, we didn't have people like selling their RPL at that price. So as people were buying it, like there was a lot of volatility in those ranges. So in this right now where we are as well, there's a lot of volatility in these ranges because there's so little liquidity. So like 1,000 RPL sell will reduce the ratio by a lot more than it would have if the ratio was higher. If it was like 0.016, then that 1,000 RPL sell would do like 5 times less ratio movement. So one of the things that we really need now is there to be the liquidity, and we need there to be a case where people put up their ETH into those zones. So about that, we got 2 pieces of news from Lucas here, who says, good morning, more one-sided buy liquidity on Uni version 3 is being added, and more will be added tonight. So if you have a look at this chart that I just showed you, like this little green bar that you can see kind of in the middle, that wasn't there yesterday. So there's been some ETH that has been added there already, and there's more to be added as well. And that's really exciting because we really need that liquidity. And then Lucas goes on to explain. He says all our ETH holders, they're more incentivized than pure ETH holders, could help backstopping RPL by providing buy liquidity on our ETH RPL pair on Uniswap and earning fees while doing so. When the price recovers, they'll be again left with our ETH only and gained fees in RPL. So this is actually a really interesting strategy that it might not be suitable for everyone, but I think people should really be paying attention to this. Is what can happen here is if you deposit your RETH into Uniswap right now and you set the range at which you like want to buy RPL, and I'm saying buy RPL in like quotes because you're not technically buying RPL, but you're making your RETH available for people to sell into. Now what that means is it acts as a support for the price, and it reduces volatility a lot, and it can add as become a zone of support for the RPL token. Now, what Lucas is saying here is that if you put your RETH onto Uniswap, for example, at a price range like 0.010 to 0.012, kind of where we are right now, if you put your RETH into that area and the RPL price goes into that area and then down below it, hypothetically, but eventually it comes back above that, when you go to check out, you will still get all of your RETH back that you put in. You won't lose any RETH, but what you will get extra of is the RPL that you gained in fees while people were trading in and out of your range. And that's a really great thing about Uniswap version 3 is that you can do the one-sided concentrated liquidity, and each time the price moves through your your liquidity that you provide, you get really great fees. And I was talking to someone earlier today, and they were mentioning that while their liquidity was while RPL price was in their liquidity zone, they were earning about 30% yield per year, APR, which is amazing yield, and you're not really going to get that yield anywhere else. Which is amazing, right? And that's purely in fees, because you set up a concentrated wall, and you let people trade in and out of that. And the idea is, like, if you think that RPL in the future will be worth more than RPL is now, then this is pretty much a risk-free way of doing it. Uniswap are some of the most battle-tested contracts in all of crypto, and they're the biggest honeypot as well, and they've never suffered any kind of hack. So I think, I'm not giving you financial advice, I'm not giving you tax advice. Please do your own research before you do this. But if you want to make some quick APR and earn some earn some RPL without any risk to your RETH virtually, this might be something that you can do and you should consider. Pop into trading. People will help you figure out how to do it if you are curious about doing this. Okay, next we had this update from the call that Langers did with SSV today. So Langers, of course, I talked about this yesterday, he's doing a call with SSV, and in the call he had a lot to say about the partnership between Rocket Pool and SSV as well. And I've got some notes here that I'm just going to get ready and read out to you all, so we can see what's going on. So just give me one moment. I'm sorry I didn't have this loaded. Also, my computer's being really slow, so that's always fun. I think it's Discord actually that's being annoying. Okay, I can't access that. I'll come back to that at the end of the episode if I can't share it before that. Okay, next we have this update from White Sox maybe, I don't know, WSOX1235, saying, hey guys, I put together a quick guide on how to distribute a mini pool balance via Etherscan. Feel free to share it with anyone who asks in this channel about how to do that, or link to it in the Rocket Pool website if you decide it can be useful to be placed there. It's completely for the community to use as it feels best. And then there's a link to a GitHub, what this does is, if you are having issues with your node and for some reason you can't exit your validators from your node machine itself, then you can go to the Etherscan website for the different Rocket Pool contracts and interact with those manually and exit your validators. So it says a layman's guide on how to distribute a Rocket Pool mini pool balance after withdrawing a mini pool. This guide is meant for someone who needs to use Etherscan to distribute the balance of their mini pool back to their withdrawal address. This guide assumes you have already performed a voluntary exit of your validators. So it gives you information about the circumstances it can be used in, and then it gives you a step-by-step guide on how to do this with images and like really straightforward notes. So I think this is a really nice document that WSOX1235 put together, and I'm sure it's going to be useful for some people in the community. So thank you for doing that. Okay, next we're going to be talking about some other protocols. So the first thing we want to talk about is Lido here. Just Lido we're going to talk about for a minute. So yesterday Lido had slashings on their validator set. So it says 20 slashings have occurred relating to validators operated by launch nodes, node operator as part of the Lido protocol. Launch nodes and DAO contributors are investigating. The validators are offline and slashings have ceased while the root cause is being investigated. So here they go on to kind of like explain. It says users of the protocol are not affected apart from reduction in the daily rewards that will be reflected in tomorrow's rebase. Currently the initial projected impact is around 20 ETH. So 1 ETH for each validator. So that's about 2.25% of average daily protocol rewards, or about 0.00023 of total TVL, plus additional penalties while validators are offline for troubleshooting, and the inactivity penalties slashed validators will accumulate before exiting. It says further investigation is underway. But what people were like really kind of like mocking Lido with this. So like here Lion shared a screenshot saying currently Lido does not specify best practices or standards for Ethereum validators in order to reduce the potential for single points of failure. However, exemplary level of proficiency is expected across the categories of, and then there's expertise with the inner workings and maintenance of node software, especially running validators at scale, and key generation and management. So it looks like that person failed with some of those things. Tamuki says the slashings will continue until morale improves. And then there were lots of other comments. One of the things I really liked here was from Borsi, who says professionals and a salute. And of course, that's going back to Vasily saying that, Lido's not for, like other protocols might be for hobbyists or armchair stakers, but Lido's for professionals. So I think Patches or someone else shared the statistic that like a big chunk of validators that have been slashed post merge have been Lido validators. I think it was like 28 or 30 out of 110. I think 23% if I'm remembering the numbers right, somewhere around those numbers. So that's always, yeah. This is the thing, right? Like Lido, if something had happened and the node operator couldn't have like fixed that in time, it could have been the case that they had 1,000 validators slashed at the same time. I'm not sure how much each validator has now. Somewhere I think 10,000 validators per node operator. That could have 10,000 validators could technically have been slashed if there was a problem on one of these node operators and they didn't fix it within the 6 minutes that they have per epoch. I guess they saw some validators getting slashed, they turned off the machines right away and they were like, let's fix this before turning them back on. I'm not sure what the status of this problem is now. If someone helps me get that information, I'll cover it in tomorrow's episode. Okay, then there's some more Lido news here as well. So Lido is currently asking for some money from Arbitrum to incentivize their ST-ETH on the Arbitrum network. And most people who've asked for this, there's a whole bunch of projects that are asking for this at the moment, but most of them are kind of like getting the money. But this one's become like a really heated debate, and there's a whole lot of people on crypto Twitter who kind of like talking back and forth about this and kind of calling out big voters one way or another. And it seems like the vote was kind of like neck and neck until today, when L2Beat voted with their 19 million ARB tokens earlier, saying we're not against Lido in general, but given Lido's market share in staked ETH, we believe such a proposal requires additional discussion. And here, like, other people have been like abstain, saying like we support Lido but not this specific proposal, and other people saying can't create incentives for Lido right now, let's be real. So this is action, right? This is social signaling leading to real consequences for Lido. They would have gotten I think they were asking for 5 million or 4 million ARB tokens, which is about $4 million, which is a whole lot of money, and I'm kind of glad that they're not getting that. So great job, Arbitrum voters, and I voted in this as well. So I'm not signed in on this wallet, so you can't see it, but I voted against Lido, obviously. And then finally, let me just refresh this page to see if we've got new numbers. But the validator queue now is down to 6 hours and 27 minutes. So it looks like by the end of today or maybe tomorrow, the beacon chain will be in harmony in terms of validators coming online and going offline, with there being virtually no queue at all. And one of the things that happened as well is that the churn limit increased to 13 per epoch. So that should be gone in a matter of hours now. So yeah, it's exciting times in the beacon chain, and I'm really wondering how this is going to impact stake coming online for operators of different size. But yeah, it's pretty cool that the queue has been eaten through, because for a while there, it was a month and a half long queue. So congrats to everyone who waited in that queue. I think I was in the queue for 40 days, so good stuff. But anyway, that's everything from Rocket Fuel today. Thank you all for listening, watching, and being part of the community, and I'll see you all tomorrow. Bye.